Welcome to Markets Now. I'm Michelle Rook along with Ted Seifert with Zaner Ag Hedge, and we're seeing mostly higher prices except for corn. As far as the big leader for the day, though, Ted, we are looking at soybeans and meal being strong here. We're kind of building in some Argentina weather and drought concerns into those markets again, aren't we?
Yeah, Michelle, you can say that Argentina's gotten some pretty decent rains, and they have some rain in the forecast for this week. But then beyond that, the concern is that forecast is turning hotter and drier once again. So, uh, last week we kind of had the feeling that this weather pattern had changed for the better, and that the end of this growing season is going to be very beneficial for soybeans. And we know that if you stress soybeans early and then turn on the rains and proper heat later on, you can still end up with a very good soybean crop. But now there's a little bit of question about that. The other thing that's really creeping into the market is Brazil's weather. Brazil's only about 5% harvested, and their forecast has some dryness in it, but then they keep getting these rains. So now there's some concern that there might be some harvest delays, some quality concerns, maybe a little bit of a loss of yield in Brazil. I don't know how much stock to put on that. I really do think they're going to get this crop out fairly well. And the early harvest results that we've been hearing from Brazil have been as good as advertised, if not maybe a little bit better. So they could stand to actually lose a little bit. Either way, that Brazilian crop is likely going to be the largest crop this world has ever seen, largest soybean crop this world's ever seen. And the Brazilian farmers are well undersold for this time of year. So there's a lot of selling pressure that can and will be happening in the fairly near future. I think you got to kind of treat that as a really long fund position, Michelle, because you know that they're going to have to be getting out of their long cash positions, i.e., selling and hitting the board at some point in the relatively near future. So it's interesting to see how much strength that you have in soybeans today. Whether we hold on to it in the close is a very good question. You also have a bit of a head and shoulders formation kind of popping up on the charts, potentially if today's highs hold.
Yeah, we'll see. How small do you think the Argentina crop is, though, and will Brazil make up for it, Ted?
I have a really hard time putting a number in anything below 38, but I think it might actually be a bit better than that based on the recent weather that they've had. I'm not sure if I'm trusting that longer term forecast getting hot and dry. A lot of times when you have this transition from La Nina to neutral to El Nino, you get kind of this sort of back and forth volatility. I think that's what you're seeing in those longer term forecasts. I'm fairly optimistic that the Argentinian soybean crop stabilizes and then starts to get better. If you look at crop conditions last week, they improved pretty dramatically. Not all in the excellent category, but their equivalent they call normal. Their fair, good to fair category really increased pretty dramatically. I think that'll happen again next week. So yeah, that Argentinian crop, at least in my mind, seems to be stabilizing at this point, and I do think there's upside potential from these worst case scenario numbers that we had been talking about just a couple of weeks ago.
Gotcha. And like you said, the Brazil crop may make up some of that. And so do you think this is a selling opportunity at this point? I mean, how much farther can we really extend this rally if Brazil is as big as it is?
That's a really good question, Michelle. I'm kind of letting the charts sort of dictate that a little bit here today. So I'm very curious to see where we close because, like you said, there's potential to be putting in that second shoulder of a head and shoulders if we're going to sell off and only be up a penny or two or just slightly higher or even lower by the end of the day. If not, if we're closing on highs, then I think you got to sit back and kind of wait. But as we said, those Brazilian farmers are going to have to sell fairly soon. I think the clock is ticking on any bigger rally in the soybeans. So yeah, I think you got to be looking at it really hard. There are re-ownership strategies if you want to carry a long position, and I'm more specifically talking about new crop, right? If you want to have some upside potential for the growing season in case we have our own problems, which sometimes can be associated with a transition to El Nino. There's ways of doing that, but we are at some really very good prices. That fundamentals seem to be changing a little bit over time unless there's a big catastrophe for our growing season. And if not, the downside seems to be fairly substantial. So I would be looking at this as a selling opportunity. I would be looking at this to not only not finish, but get pretty close to being done on selling old crop. But I'm really looking at new crop. I think guys should be 35, 40, 45% sold on new crop, which is a lot more than I normally would be at this time of year. But the prices, I think, justify that.
Corn not following soybeans. So are we seeing corn soybean spreading? Are we running into chart resistance or what's going on there today?
Yeah, you hit them both, Michelle. Last week we saw the corn gaining on soybeans. So, that corn bean spread was favoring corn last week. Here today, early this week, we have a little bit of a reversal of that spread, and that's due to the bigger strength that you're seeing in soybeans. Corn also seems fairly reluctant to embrace that changing Argentinian forecast, and really isn't sure exactly what's happening there. The wheat has also been on both sides of unchanged, and that might be a little bit of a limiting factor for corn too. But we did have that sale to Japan this morning,
Right.
which is nice to see. I mean, look, any export sales in corn at this point are nice to see. But Japan is, our second largest export destination for corn. So we'd love to see some bigger numbers from Japan. So we kind of take that with a little bit of a grain of salt. Either way, corn is really not the leader here today, just kind of a follower.
Right. And the wheat market, are we trying to put a little weather premium in there? And in the HRW futures, we have seen maybe a little bit better technical close last week for the week. And, as far as the Chicago futures, looks like we're on a little bit better footing there as well.
Yeah, it absolutely does. I'd say a lot of that weather premium came in mid to the end of last week, right? And so do we need to put further weather premium in today? I don't know. I will say that a lot of the coldest areas are areas that have some pretty decent snow coverage after last week. So we're maybe not as worried about winter kill because of that. And you also have wheat running into the Chicago wheat contract, running into its 50-day moving average with its highs here today. And after being in the downtrend for as long as it has been, that also represents the downward trending channel. So naturally, you're going to see a little bit of technical profit taking, especially with corn kind of dragging its feet. So wheat's been on both sides of unchanged. And I think it's a positive development that we're not down 6 cents like we were earlier in the day. Wheat is on the positive side, albeit off of its highs.
Yeah. What about the cattle market? We're hitting new contract highs in live cattle. Is that just because we did have that better cash trade in the South on Friday, or is the market anticipating a very bullish cattle inventory report tomorrow?
Yeah, I think the hope is that we're going to see a fairly bullish cattle inventory, right? I mean, that's the whole story we've been talking about for the last couple of months, maybe coming to fruition of these lower production numbers that we're expecting to see through the first 3 quarters of this calendar year. So the expectations for that report are fairly bullish. So you're getting a little bit of buying in front of that. On top of that, the higher cash trade that you saw on Friday, that this all might be related, by the way, Michelle, but that higher cash trade that you saw on Friday is definitely helping the market out, I would say, here today. The question is, though, with Packers margins not being all that robust, are we going to continue to see that cash market advance, especially in a time frame where we usually see a little bit of a lull on the supply side of things now that we're past the holidays and we're pre-spring grilling season and so on and so forth? So, yeah, new highs, chart looks good. Whether we can hold it or not, I think really is going to depend on what happens in that report and then where cash trades after that.
Yeah, but strong considering we have outside markets like the equity futures being down here today. And I would anticipate that might be a little bit of positioning ahead of the Fed meeting.
Yeah, a little bit of positioning in front of the Fed meeting. You've got some sort of mixed expectations from the Fed. I think a lot of people think that this will be the last increase that we get from the Fed before we see them, pivot or at least take a break. And I think most people are looking for a 1/4 point hike. But you go back to that GDP number that we saw last week, which was better than expected, and you look at unemployment, and you look at the stock market for the most part stabilizing. I think there's a lot of things that suggest that the Fed could be a little bit more aggressive here, and you wonder if maybe they are. If that is the case, well, that might throw us for a little bit of a loop. But either way, yeah, the market is for the most part expecting about a 1/4 point hike from the Fed tomorrow. If that's what happens, then I think we're just back to business as usual, and then just kind of keep trading individual market fundamentals.
All right. Well, thanks for joining us. Appreciate it. As always, Ted Seifert, Zaner Ag Hedge, and that is Markets Now.